Focus. Ideate. Innovate. Enable.
Change is the next leg of transformation. It's definitive, relentless, and requires a holistic and human-centric approach. A reimagined approach to transformation has become a fundamental step in orchestrating expansion and development in any organization. Transformation Realized, powered by EY, is a brand new chapter where we bring to you inspiring stories of business transformation that have put the customer and innovation at the core. The last episode of this series takes us through the transformation journey of the largest private sector non-life insurer in India.
Businesses of today can stand the test of time only by adapting to change. Leaders are leveraging the emerging trends of savvy consumers, evolving go-to-market channels, and the power of technology to achieve scale and long-term growth. Now, this week on the 6-part series of Transformation Realized, powered by EY, we bring to you the story of ICICI Lombard General Insurance, India's largest private sector non-life insurer, and its acquisition of Bharti AXA General, a strategic move driven by ambition and vision. Not only that, this acquisition heralds a new era of power and dominance. To talk to us more about this, please welcome Bhargav Dasgupta, who's the MD and CEO of ICICI Lombard, and Rohan Sachdev, who is the Consulting Services Leader at EY India. Mr. Dasgupta, Mr. Sachdev, both of you, thank you for your time here on CNBC TV 18 and for being with us here on this special episode. And Mr. Dasgupta, I'll start with you because, being the largest private sector non-life insurer, it's not an easy task running a company like that. Give us an insight into how you've run the company over these years to ensure that it maintains that pole position that it has achieved now over the years.
So, Ritu, maybe I can start in a lighter vein. I guess we should thank our competitors for being so generous with us. And which is why we are where we are. But on a serious note, I think there are a few foundational pillars that we focused on as a company. The absolute number one has been building consumer trust. Insurance is a business of, in a sense, a delayed gratification, a promise to pay a claim if something happens at a later point in time, right? So how you service that experience for customers is vital in terms of building, a brand and a franchise. So that's foundation number one. Number two, leadership for what? I mean, leadership not just from a top line perspective, but it has to be more sustainable.
Yeah.
So focus on risk management, focus on all other aspects of business rather than just top line. I think that's important. Third thing is that we believe we've tried to stay invested and kind of invested ahead of the time on tech. But, and this is not just now. Over the years, we've always been focused on tech-led innovation.
Yeah.
And that's helped us. And underpinning all of this is, I think, a usual issue of people and culture. Honestly speaking, I think we are very fortunate to have the team that we do. A great bunch of guys, a lot of ownership, a lot of entrepreneurship, and a sense of pride in whatever they have jointly created. So yes, I started with the joke about the competition. I think really the team doesn't like to be behind anyone.
No, absolutely.
And that's a DNA that's very important.
People make the company, don't they? But how does Bharti AXA's the acquisition that you made, how does that fit into all of this? And what was your thinking behind the acquisition? Where does it fit in the overall scheme of things?
So if you look at the timing, this was just after the pandemic. All of us got locked down. There was panic all around. And after a couple of months of the lockdown, we started thinking that this was probably a good time to think about inorganic growth, simply because at least our belief is,
well.
Yeah, it's also the time that when people are more afraid, that's a time to think about growth.
Insurance, yeah.
So we started looking at opportunities, and when you look at a specific target, Bharti AXA was really a very apt target for us. In terms of size, it was roughly about 22% of our size. It was doing well. It was scaling up, but it was still relatively subscale. So if you look at its business numbers, we measure our business on combined ratio. So combined ratio was a bit elevated, but if you split that, roughly 78% was loss and 42% was the expense ratio in a total combined of 120.
Yeah.
Which basically showed you that the underlying business was fine. It was just that it was subscale, so expenses were very elevated. Thirdly, there were certain distribution partnerships that they had, which was adding to our overall franchise. And lastly, and to me this is very important, we liked the culture and the team. Because at the end of the day, those soft aspects play a very important role. And remember, we were doing this virtually.
Yeah.
Everything that we did, from
all the
diligence, negotiation, till the day that we got the final approval, there was no physical meeting between the teams.
Oh, wow.
It was all virtual. So you had to trust, the team and the management there and the promoters.
But Mr. Sashi, was that the most unique aspect of this deal? I mean, the entire deal being stitched together virtually, or what do you think? How is this any different from the several other acquisitions you've helped undertake?
See, I think first of all, let's understand. Yeah, of course, being in COVID, it was unique, right from the propositioning to the end of the deal. I met most of the ICICI Lombard team for the first time.
Virtually as well?
Well, I met them at the party physically for the first time, the celebratory party.
So everything was at the end of the transaction.
At the end of the transaction, and 3 months after that. So everything was done virtually. But just stepping back to when people think about this sort of deal, see, globally a lot of deals happen in insurance. I think what people underestimate is people often look at financial services from a balance sheet size perspective. But you look at the volume of transactions that go through in India is of a totally different genre.
Yeah.
So when you had something like Bharti AXA and ICICI Lombard coming together, it's probably the largest deal in the insurance world in India that's ever happened so far. So I think that was one thing that was sort of, I would say, very unique about this deal. It was large. And when I tell you scale, think about it, there were 16,000 distributors that we needed to bring on together. There were 3,400 employees that were in Bharti that we needed to absorb them. And Bhargav's agenda was always to absorb them in a very gentle manner. Bring them in as a family rather than sort of make them feel that they're new in the environment. Yes, that was there. I think that was the second one. You just think about, we had about 3 crore sort of customer letters to send out. There were 140 branches of Bharti that we had to think about. On top of that, the product portfolios were very different. The technology systems were different. They had a different data system, we had a different data system, all of that. So as you put it all together, I would probably say, and I had worked on a lot of global insurance deals historically, I would say this was done in a pretty rapid manner, in a very, very transparent manner. And I think you've also got to think about, we are a very regulated industry.
Yeah.
So at all times are being transparent.
Some would say too regulated.
I'll leave that for Bhargav to answer. But so all in all, it was, and as you said, it was done in COVID. So building relationships with people on both sides, building trust, then delivering at speed. All of us that was done in a virtual environment. So yeah, I'd say it was pretty unique in that sense.
All right, hold your thoughts because we have to take a very short break. We're back in just a moment. Stay with us. Welcome back. You're watching this special episode of Transformation Realized, powered by EY, where today we're talking to the top leadership at ICICI Lombard, as well as Rohan Sachdev from EY. Mr. Bhargav Dasgupta and Rohan Sachdev, thank you for staying on. This is not an easy deal. We've been talking about the size of the deal, and Rohan has outlined how unique it was. What would you say were some of the top 3 challenges, if you were, to outline when you looked at the deal, and how were you able to smooth things over to achieve closure in the time that you wanted?
I would say maybe there were 3 key aspects that we were particularly focused on, which we felt were the 3 challenges that we had to address very, very tightly. First was, as we both said, this was done in a virtual environment where the country was going through infrequent lockdowns, closures. Offices would be closed suddenly, courts, at times were not open, but we had a very tight time frame to execute. So we had given ourselves roughly about 12 months to complete the entire transaction from deal announcement to legal day 1. and we did not want to slip on that timeline. So, execution at speed in a context of uncertainty because of COVID and unpredictable lockdowns, etc. I think that was probably challenge number one. Secondly, once we got the LD1 done, the integration effort that we put in together thereafter, I think the key objective for us was that we were bringing two organizations together, and our philosophy was 1 + 1 cannot be 2; it has to be much more. So we did not want to lose momentum on core business. So we had to ensure the core business, carried on, as BAU, while we get this integration done at the pace that we set for ourselves. So we didn't want the core business to get distracted in either of the organizations. And thirdly, and Rohan rightly pointed this out, we are in a services business, and when you look at an acquisition, what is it that you are getting as a value, right? You would argue that value can be balance sheet, could be customers, could be policyholders, could be distributors, but finally all of that boils down to the team and the people, and you had to protect the team and give them a sense of comfort and confidence that you're coming in and we are not, there is no winner or loser here. We are coming together as two teams. And, obviously in the part of the integration process, the best man will win, but it will not be driven by which organization you're coming from. It is purely based on merit. I think those three were the key, challenges that we focused on. And hence, having the right delivery architecture. We work with Rohan's team in EY. We also had a HR firm which was helping us on the people and culture side. I think getting everyone together to work as one team was the most important.
People management. And
the entire project management overall.
Now that you've outlined the challenges, tell us what synergies you've seen since the merger took effect. And, what is the sort of sustainable advantage that you see in the long term from the two entities coming together?
So, you started by saying that we were number one in the private sector, right? So, we've been number one in the private sector for 20 years, but we were number 5 in aggregate. There were 4 companies which were the legacy companies which were ahead of us. This transaction leapfrogged us to a second position in the overall industry. So, gave us a market standing improvement which would have maybe taken us 2 to 3 years extra time if we hadn't done this transaction. Secondly, if you look at the transaction, as I said, this was roughly about 20 to 23% of our size. We paid about 7.3% of our stock to do this transaction. So there was significant value to be delivered if we could get the synergy benefits that we talked about. And when two organizations come in the same line of business, in a sense, there was obviously a lot of scope for synergy. And whatever we estimated as an organization in terms of synergy, the number that we put out in the market was 200 crores. We got the synergy benefits sooner, before time, and we got higher level of synergy benefit that we did not completely factor in, because you couldn't factor everything. So, for example, you look at the synergy on productivity, on people cost, on technology stack, on branches.
So there was a positive
all
upside.
Of those were factored in, right? But there are certain things that we saw in claims practices, where maybe in the same partner, maybe in a hospital or a garage, we saw slight differences between what we were doing and versus what they were doing. Now, it was not always that we were always better than they were in every part of the chain. So there were a lot of learnings from each other that we initially hadn't anticipated. Plus, I think they were very disciplined about their reserving and their accounting, which was expected, but we couldn't account for it, or anticipate it, fully, which has been an additional benefit that we've got.
Well, Mr. Sachdev, what would you say has been EY's approach to this transaction? I mean, there were things that were factored in that were probably on the positive side. I don't know if there were some on the negative side, but day one readiness, getting the synergies, getting everything on board. What was your approach to it?
So I think just in background, we actually worked with Bhargav, our transactions team, worked with Bhargav in actually making the marriage happen initially between ICICI and Bharti AXA. So we had some background in terms of that. And then we came to the post-merger integration to look at what we could do. I think I would say 3 or 4 things. First of all, we asked the right question to start with. And we asked Bhargav really, what do you want to achieve out of this? And I think I still remember his words. He was very clear. See, I want a very smooth, time-bound, regulatorily transparent and beneficial to all deal to happen. and that's what I expect from the post-merger integration. So I think when the leadership is very clear from both sides on what they're going to run after, what they want to achieve, I think that was one great sort of a stepping stone. I think secondly, I think we drew up a joint scorecard, and I think that was pretty good for us, that our scorecards were the same, absolutely the same.
What were these scorecards about?
This was all about whether we can get the synergistic value, whether we can take cost out, can we get additional revenue, how do we settle the people in, how do we look at a new joint business.
So how well you're doing on a scale of say 1 to 10 on those parameters?
Well, I think we did pretty well, and that is reflective on how Bhargav sort of rewarded us, and sort of where we've seen the business go today. But I think what that actually meant, Ritu, is you have a very clear scorecard. The second part of it was putting the right team in place. These integrations are far more complex that are visible to the eye. They're very complex, and every aspect has to be taken care of.
Yeah.
You know, Bhargav made an example of claim settlement. Are they doing it better in one area? Are we doing it better in one area? Which is the one practice we choose? And I think Bhargav was very clear, choose the best practice.
Yeah.
So this not just what we are doing is right, just let's choose what is best for our customers, our shareholders. So that was there. I think so we put the team together. And we actually had a unique team. We had a bunch of industry specialists, we had practitioners, and then from our consulting business in EY, and then we have EY Parthenon, which specializes in post-merger integration. So we got a post-merger integration office as a layer on top to govern the entire project. And that governance was not only for EY, it was governing a joint team from ICICI Lombard and EY. So that was one joint team. We used to have a call every morning with 60 people on it, every morning.
Every day.
Every day.
Single day. 9:15
60
a.m.
people across ICICI,
And
EY?
every day.
Oh,
every single day. We used to call it Gopal's call because he used to run the call.
Our CFO used to run the call.
Yeah. But we used to do it every morning.
Yeah.
So that was the second part. I think the third part was being very clear in terms of what are going to be the benefits at which point of time. Bhargav was always very, very clear about the cultural equalization that we had to create in the new organization, and how we treated people who were coming in. So that was a big aspect of what we did. Then looking at technology, looking at all the regulatory approvals, what are the approvals we will need, at what point will they come, if there is a delay, will we stop our work, or what will we do, how will we deal with that delay, and if there is a delay, what's the catch-up mechanism. And then you have various streams, how do they integrate to get the value out that is there. I would say technology was a very, very big part. I think people might undermine that, but when you're doing such a big merger, imagine just merging a general ledger, the amount of thinking we had to do. Yeah. How do we bring it together?
All right, hold your thoughts because we have to take a very short break. We're back in just a moment. Stay with us. Welcome back. You're watching Transformation Realized, powered by EY. We're in conversation with Mr. Bhargav Dasgupta and Mr. Rohan Sachdev. Thank you, gentlemen, for staying on. And Mr. Dasgupta, again, let me start with you. Now that this mega integration that we spoke about is finally behind you, what's next for ICICI Lombard? What's your vision for the next 3 to 5 years? I'm not asking if you're looking at another inorganic opportunity, but what is the larger, sort of vision? Because when we talk about insurance in India, severely underpenetrated even today. So, what can the company do?
So, as the famous ad line said, we are number 2, so we try harder. So, as I said, we are still number 2, so there's still a long way for us to go. I think what we're looking at is, as a company, we are extremely optimistic about our sector, and obviously underpinned by what's happening in the underlying economy. I mean, if the economy grows at, let's hope 7% and 8%, not 6%, you're talking about a insurance growth of roughly 2.5 times, so between 18 to 20%. Yeah. Our aspiration will continue to be that we grow faster than the market in a sustainable manner. I mean, that's core, as I said right in the beginning. Now, the changes that we are seeing, since we touched upon some of the regulatory processes involved, the changes that we are seeing in regulation are very, very positive from our sector perspective. Clearly, the current regulator is very keen to increase ease of doing insurance business, and drive penetration faster. Now, the changes that are being brought about, we believe can give it another few percentage point fillip. So, you are looking at, let's say, as a sector potentially growing at about 20% plus. Now, within that, one of the key roles that insurance plays is risk transfer, and by providing that security support, it encourages entrepreneurship. But our sense is the role of insurance gradually is shifting away from risk transfer to risk management, and that's a journey that we are on. Apart from business growth and overall market positioning, that of course is an aspiration for us. I think the bigger opportunity for us is to transform the services that we provide to customers. And again, there's a lot of talk about the Insurance Act changes, which will facilitate some of these things. So I think the exciting times for insurance, both in terms of market growth as also the transformative power that some of the regulatory changes are potentially unleashing, will be exciting.
Okay, before we close this episode, since we're talking about the transformation itself, your final thoughts on, what are some of the key learnings for the industry to take away when working on an integration of this size? What would your suggestions or advice or learnings or takeaways be?
I think I would just, say 3 or 4 things mainly. I think, Ritu, one is, I think clarity of thought on why you're doing this. I think Bhargav articulated that they'd seen what was sitting in the AXA business and how could they sort of in lots of ways energize that. So I think just the clarity of thought in terms of how you're going to do this and why you're going to do this. Second one is, I think about people. One big part of an integration of this size, and in a financial services business, there's a lot of people involved, is about the cultural fitment. And how are you going to make that happen even if it's not there on day one? What's your plan in place to get that to happen?
Your work doesn't stop when the merger.
Correct. You've got to have those, in this example, you've got to have those 3,000 people living and breathing ICICI Lombard. So I think, how do you think about that? How do you welcome them? I think that's very important because that could be disruptive otherwise. I think third one I would say is terms of, transparency to all the stakeholders, transparency to the regulators, and transparency to the teams that are working on this. Fourth, I would say, is just putting together the right structure and that vision. Saying, if you're going to go through this 18-month journey, what do we want to achieve at the end of the 18-month, and how do we measure ourselves in a fair manner? I think we never measured ourselves saying, you were going to pay me this, I've done this, I've done. We measured saying, have we achieved at least 90% of what we set out to achieve? And what is there that is left? And what do we need to do differently to achieve that? I would say is that. So I would say these are the 4 or 5 things that people should think about. I would also say, to end with, is they are difficult, but I think if you put a structure around it, they're actually quite a fun journey because every day there's new excitement around these, and I think that's really great. So for our teams, they went away from this assignment learning a lot, and every single one of them is super proud of what they achieved. Really, and that I think so. Just those things will be very important as you look at a large integration.
Those are wonderful things to hear, and to focus on the structure, have transparency with all of the stakeholders involved, take the teams together, and of course the work doesn't stop with the integration. To continue to build that culture with the employees that you brought together. On that note, gentlemen, thank you very much for sharing your thoughts and for sharing your story with us here on CNBC TV 18. It was a pleasure speaking to both of you. Thank you.
Thank you, Ritu.
On that note, we're going to wrap up this special series of Transformation Realized powered by EY. Thank you for watching, and it's a goodbye from all of us.
That's it then on this show today. Throughout the series, businesses have come to recognize the critical significance of transformation in today's world. As the series concludes, it leaves a lasting message that embracing change and adaptation is essential for success. The journey may be over, but the impact of realization will shape the future of businesses around the world. From all of us here, goodbye. Thanks for watching.
Focus. Ideate. Innovate. Enable.